This is Benzinga Live. Spencer Israel and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wujasek from Trend Spider. We have a
breaking news. What is up, everybody? Happy Wednesday, happy hump day. Welcome back to another episode of Benzinga Live. It is Super Bowl week also, and we're getting closer and closer now, 3 or 4 days away from the Super Bowl. Let's go. In other sports headlines, last night, Mr. Lebron James from Akron, Ohio, became the NBA's all-time leading scorer, passing dream Kareem Abdul-Jabbar. I watched it. It was exciting. It was cool. And I was talking to my friends about it. So what's cool for me about it is like literally my whole entire conscious life. Right. LeBron started playing in the NBA when in 2003. I was 6 years old or 7 years old. I remember when I was 6, 7, but really like, you start becoming more conscious and stuff a few years later, 10, 11, 12, whatever. My entire conscious life, LeBron James has been the NBA. The NBA and LeBron James have been synonymous with each other, gone hand in hand. And so it was cool to see. I mean, well, you gotta, for me, here's my thing, is I gotta recognize like greatness where it is. LeBron is obviously great. I don't love him. Like, he kind of annoys me sometimes. Like, even last night after they did the thing, like, had to stop the game for 20 minutes to give this dude, he had to talk. Kareem had to talk. They had the commissioner out there. I was saying, like, they may as well have brought a performer out there, made it a whole, like, halftime show. So, I don't know. But it was cool to see again. Just incredible. I mean, if he's not, your number one basketball player of all time, he essentially has to be number 2 at least. So, very cool to see. And then other news last night, of course, you had President Biden, Mr. Joe, went out there, gave his third State of the Union address. Frankly, I don't know if a lot of people, I don't know if they thought he'd make it that far. But anyway, I think I didn't watch it, to be honest. I mean, I don't care enough about that stuff to watch it. But I from an econ finance standpoint, I was looking at what he was going to be talking about, and it seems like the at least from the economic standpoint, the stuff he was talking about was very well perceived, because I saw some polling numbers, right after the speech last night, that I guess like beforehand it was like 50% of Americans said they were approving of Biden's like economic policies, and then after the speech that went up to like 60%. So people, I guess, liked what he had to say. I didn't really watch it. I did talk yesterday a little bit about Biden going after stock buybacks, and this is kind of controversial on Wall Street, and we'll talk about exactly why someone would be going after stock buybacks, why, though buybacks have critics in general, what Biden's doing to try to prevent them, etc. But before we get going on the show today, let's just do a quick rundown of the overall market. S&P 500, the SPY index, trading down a little bit more than a full percent, about 1 1/10%. Going over to the Qs, tech getting kind of clobbered today, down about 2%. And your Dow Industrial Average is down about 0.5%. And you know what? I mean, like, I'll tell you guys right now, I'm not in any active trades. I mean, my stocks that I own, my stocks that I hold, I'm not in any active trades. If I were going to get in any active trades right now, and I haven't looked at the options chain, so I'm sure these are like very well overpriced, Coinbase and Tesla puts are what I'd be buying right now. And I'll tell you why. Because I've remained throughout the past, 3 months, 6 months, even both times we've kind of gone down to 350 in the SPY. I've basically been like, I don't really think things are as bad as people are making them out to be. And that might be more of a product of the fact that you have those kind of perma bears and whatnot out there, that instead of just saying like what may be true, that the markets, aren't, financial conditions aren't great or whatever, they had, it always had to be, the biggest market crash ever, like the Michael Burries of the world. It's just like, come on, like, do I really? And I don't know why I always lean on this example, because I had multiple people come on the show, economists come on the show and say, Yeah, what's happening in Europe right now, or this was back in what, the end of summer or early fall. They were saying as Europe goes to winter, supply issues of energy because of the war, people are going to be freezing. They're not going to have enough power. Businesses are going to have to shut down so people could power their homes. And I'm sitting here thinking, like, all right, do I really think businesses in London are going to close up shop because they don't have enough power or energy so people can heat their homes? And sure, maybe we got lucky in the beginning of the winter, ended up being a little bit warmer than normal in Europe, which helped the energy prices. But at the end of the day, like, people made it, tried to talk about it as if it were a fact. We were going to, like, see all these things and see this huge market crash. And I'd kind of always been up here saying, like, I don't really think things are as bad as they are. And I still think that's true. And almost because of that, like, from an economic standpoint, our economy is so strong. I do think I'm in camp right now. I do think rates will be higher for longer than even what's maybe being priced in right now by the bond markets. And I think that's a product of because our underlying economy is strong. And for whatever reason, you have a lot of people out there who want to believe that's not true, who want to tell you, no, like we are in a recession. Or, I saw a tweet the other day where after the great jobs report, someone was like, the White House wants to make this seem great because we added more jobs, but people have to get 2 jobs. And I get it, right? Because people said the same thing. People for different political motivations might have said the same thing when Trump was in office, right? Like, oh, the economy is so great, but people have to work multiple jobs. I'm not saying the economy is perfect. I'm not saying, working class people have it easy right now, because I know that's not true. And there are a lot of changes I would love to see in the economy to see the, less income inequality and like all these things. 100%. I'm behind all of those. But that doesn't mean I can't also be happy the fact that the economy has like held up well, that we haven't slipped into a recession because we have, higher interest rates than we've seen in the past decade. Our economy has held up well, yet there are some people out there that want to believe and want you to believe that that's not true. Right? Just because, like, and I've talked about it a lot before. For whatever reason, I think it's because the media tends to, for two reasons. Because A, that these big tech companies, right, Apple, Facebook, Google, have a much bigger presence, if not, in reality, then visually at least in our lives, than say something like even like a FedEx or ExxonMobil, right? Like, I'm seeing my Apple MacBook, whatever. I'm on my phone, then my MacBook, and I'm on Google on both of my phone and my laptop, right? And all of these things that, like, those companies are huge for us because we see them so much. And so when they announce layoffs, it seems like everyone's laying people off, even if it's just the big tech companies. And then additionally, you have the fact that media will give a disproportionate coverage like to those big tech companies. So when Google, Apple, Microsoft lays people off, CNN, Fox News, whoever you're watching is going to talk about it way more than when Walmart lays off some people. And so, we'll keep watching what's going on with the unemployment numbers and jobs numbers, because I do worry that if we don't, if the labor market remains as tight as it is, which is good. We want the labor market to be tight because that's good for workers. It gives workers power, negotiating salaries with new jobs. The only problem you could, I guess, say with a tight labor market is it will make it harder, or theoretically it makes it harder for inflation to keep falling, right? If it's a super tight labor market, and every time, or you have all these people that can go get a job that makes, 5-10% or whatever. Typically, now, what we've seen the past 3-4 months or so is a pretty tight labor market, a lot of job demand, and inflation falling, which can actually, I think a lot of economists have been like maybe confused or surprised about, because a lot of people, even Powell a few months ago was basically saying we need to see pain in the labor market. We need to see unemployment come higher to have inflation come down. And that hasn't really been the case. And I think the explanation there is that because a lot of the inflation that we had seen is on the supply side and not on the demand side. And what I mean by that is take eggs, for example. Eggs, are expensive because a lot of birds died from a bird flu. We've talked about it on the show. I'm sure you've heard about it or read about it. The demand for eggs is going to remain pretty constant, right? People need to buy eggs. People need to feed their family. People, whatever. The supply is what's fluctuating here and fluctuating the price. In a similar sense, a lot of the inflation that we saw in the aftermath of COVID and, throughout 2021, throughout 2022, was because we had these supply side issues on chips, on energy, on whatever it was. And so specifically, for new and used cars was driving CPI higher initially when we first started getting those high CPI reports. New and used cars, and that was because the automobile companies were having trouble getting semiconductors. And then, remember, it was gas prices when, like, the national gas... I honestly don't even remember because, like, thank God it's kind of left my psyche after how many... after how expensive gas was, like, a few months ago. What was the year... let's see what the year high was. Where do they show us at? Gas prices. National gas prices. I want the... Yeah, well, here we go. Highest recorded. We got above $5. Like, that seems so crazy to me right now that we got above $5 in average in the country, not like in California or whatever. I mean, look at this. Texas is back down to paying, you're paying $3. Earlier, we got down to like $2, in some places in Texas and Missouri and stuff. So gas prices were expensive again on the supply side. Demand for gas remains pretty constant. If there's a huge recession and people aren't traveling and people aren't working as much, yeah, I mean, demand, gas will typically and oil get a little bit cheaper. But for the most part, the price fluctuations we saw in gas prices were, from the supply side, from the Russia-Ukraine war. And then more recently, as gas has come down, one of the things driving the inflation higher still, or not driving higher, I should say, because it's falling, but keeping it higher than it otherwise would be, is rent prices and housing prices. And guess what? If I told you that there's a shortage of housing in the United States, so it makes sense that you're seeing like the markets that have supply side issues have inflation problems. And the idea, I think, was always that, what is crushing demand gonna... I mean, in hindsight, and I did kind of, I was critical of the Fed at the time because I was like, what the hell is raising interest rates going to do to get more semiconductors? If anything, it's the opposite. If anything, you want to get more investments in there, get supply it higher. It crushed demand enough for, chips, semiconductors, crypto, enough that it worked, right? Like the actual prices of semiconductors dropped. The actual prices of gas dropped. But I think it will become more difficult to have a fall in inflation if we keep seeing the labor market remain so tight. I hope we can, because what we've seen the past 3 months, what we've seen the past 4 months has essentially been like the Goldilocks, just right. Inflation's falling, but it's not falling too fast because there's a recession coming, right? We're adding jobs, but we're not, adding jobs to a point where inflation's, running away like crazy again. All right. I see our first guest hanging out backstage. My man, Options Mike, going to kick it with us. Been a minute since we got him on the show. Too long. So without further ado, let's give Mike one of our very special Zinger Nation intros. When we come back, we'll be talking some options. I did see a message from Mike. He also wants to talk about why the labor market is so tight. So without further ado, let's go ahead and give Mike one of those intros, and we'll be back. Mr. Options Mike, how you doing?
Good, AB. How you been, man?
Good. Chilling. I mean, it's been a good week so far in terms of, I think there's a lot of like news to talk about. Obviously, the market the price action today, leaves you wishing for a little bit more, I think.
I'm not so worried about the price action today. I think that we're kind of digesting this big move up here, and I've been saying for a while the internals of this market have changed drastically since the end of December. And whether we get a little bit of a pullback here or not, I'd welcome it. I think this market's going higher. It's just a matter of how long it's going to take.
Yeah, I mean, I think right now, I mean, it's you have all these different things at once, and I was talking to someone about it yesterday, and it's kind of one of those situations where I think if you're pretty bearish right now, you can make an argument, basically say like there's a lot of companies like Coinbase or Tesla maybe that have debt or whatever that with higher interest rates shouldn't be up 100% in a month or whatever, or that they expect like a pullback in some of those names, and they talk about the fact that we might have higher interest rates for longer, and like those people I think have a point. And then you also on the other side have people like me bullish and say like the economy's great right now. Look, we're adding jobs. Inflation's falling. Like, it makes sense these names are up 100%. And I'd also say you have a point. Like, I think you could see both sides of it right now.
But the market's forward-looking, right? And, there's a lot of big bears out there. And I can tell they're all starting to go into hibernation because my Twitter feed is quite quieted down, right? I mean, these guys would come on, would be pounding me. When we're at the lows, we're going much lower. I mean, I had people telling me we're going to 3,200. You pick the number, they were screaming it at me, and I just stuck to what I do. I think what's going on is the market's forward-looking, and that jobs report. Nobody's talking about the first thing. The good news in that jobs report was the wage rate dropped. We're slowing. That's the most important part. We want people employed. You really think the Fed wants people unemployed? That's I'm sure the administration doesn't want people unemployed. That's not a way to get yourself reelected in 2 years. So, the labor rate is falling. That's good news there, and a lot of reason the labor market remains so tight. Everybody's forgotten about this. During COVID, we had a lot of people who died, unfortunately, right? They're no longer with us. They left the job market. People got long COVID, and a lot of people retired early. The market remains so tight because there's just less people available to work. Nobody talks about that anymore. That kind of all just disappeared, and now we need a bad jobs number. I think, if you're looking for a soft landing and to avoid any kind of recession at this point or major recession, if inflation keeps coming down, the jobs stay strong. I think that's a great combination moving forward.
Yeah, and I think I think Powell said it yesterday that like they were like surprised. I think that we've been able to see inflation come down and jobs numbers also like they've been pleasantly surprised, because I think Powell a few months ago was willing to tolerate that increase in unemployment to just tackle inflation. And again, it's not like inflation is out the door, like completely we're done with it. I think people across the board are still paying, prices that are like 4% higher than or 5% higher than this time, whatever it is.
But that's not going to go away. They're not going to companies don't give prices back once they become entrained this long into their supply, right? People have been paying higher prices now for the last year. Do you think restaurants and stuff are going to lower their prices? They're not. They're going to keep these prices and make more profits.
Yeah, I think the idea is as long as if everyone keeps their prices the same, even at the elevated prices, eventually that means there's would be 0% inflation year over year, because it's about comparing from this time to that year.
Right.
But if theoretically, right, if the restaurants and whatever kept the same prices on their menus now, and their supplies they're paying for dropped a little bit, you're right, they should be making more money and should, again, theoretically have no reason to then keep raising prices, but that's wishful thinking.
Right, but remember, we're trying to get back to 2% inflation, not trying to get it to negative. I mean, so there's a lot of things at work here. I mean, my take on Powell yesterday is he was mostly said exactly what he said on Wednesday. And it was pretty much, I read it as mostly just neutral. Yeah, if they may have to, if inflation comes, they can't knock it down, they may have to raise more than they want, but they didn't say they were going to. And people's reaction to that was like, oh, he's hawkish. I'm like, I took this, he said exactly what he said on Wednesday.
Yeah, I think the only thing that would concern me, and again, it's not that like I'm not bearish at all in the slightest. Again, like I think today's price action makes sense. I wouldn't be surprised to see if a pullback continued in some names, but like I think a lot of it's more that I guess I would just say more like neutral. Like I think like returns could be muted over the, as long as like interest rates are at around 5%. Like I don't know, I don't see like SPY like coming back to like 480 or whatever, but I don't think we're.
I laugh at you, but not in a bad way, because people say that, but we're back in a bull market, right? We're
Yes,
20% off the lows in every index. We hit 20% off the lows. Technically we're back in a bull market.
right. My point, I guess, is more just that I think like I think specifically in growth. They'll take a look, looking at like Tesla, whatever. Like, do I see Tesla getting back up to what whatever it was when interest rates were at like 0%? We were in the bull market during COVID.
Right.
I'm talking like November 2021 highs, and I think a lot of people buying these growth names right now are expecting similar price action, where I don't see that happening until the Fed starts talking about cutting, which I do think now, with the strength we've seen in the economy, is further away than what some people think. So that's like the only place where I guess I could even be construed as bearish, is that I think growth names, I don't see Tesla getting back to November 2021 highs as long as interest rates are at 5%. I could be dead wrong, but we'll see.
But you know what? The market's forward looking, and the market's kind of thinking we're going to get this Goldilocks situation where we get a couple more rate increases and the Fed will be cutting by the end of the year and starting to bring rates back down a little bit.
Okay.
Whether that's true or not, regardless, the market's going to front run that move. To your point, all these growth, and I call some of these garbage names like Carvana, which is to me just a complete garbage name at this point, losing money so much. I don't even know how they're going to stay in business with the amount of money they're losing for every car they sell. They're buying everything back, and the market's looking for growth. And if you notice the rotation out, we're seeing the names that were so strong last year, the big pharma companies, the oil companies are starting to get hit, right? These safety names like Kellogg's and Pepsi and Coke, they're rotating out of safety names. They're going back for growth because that's where the yield is. And all these fund managers that had such a horrible year last year, they're looking to make money. And, they're going to go for growth because that's where it's at. And, the other big thing is when I look at this market, AB, is how many names that we saw had horrible earnings and they bought them back. Microsoft, that was a bad report, bad guidance. That day it came all the way back. Apple was a hideous report, bought it back, right? And then some. This is a sign of a market that they want to be bought. Snap was a disgusting report. Intel was one of the worst reports I've ever seen from a big company like that. And they all bought all the weakness back. That's a sign of a market that it's starting to get into that mode. Just buy things back up. We're going to lift everything higher eventually.
Yeah, and I guess that in itself is like, does it matter if interest rates are going to be higher for longer than what the bond market was pricing in a few months ago? If the market, like you said, is saying no, like we don't care, and it's that's in a bear market. When you see, I remember I pointed out like a few months ago when we were talking about earnings. Not you and I, but just like on the show when we talking about earnings, like I remember going back a few cycles ago. It's like a year and a half ago, and like all the big tech companies, Amazon, whatever, put out their like best quarters ever, but it was right when inflation kind of started picking up, and like all the stocks did poorly after the earnings, or they didn't go up. And I was like, what do you mean you didn't go up? Like Apple just literally reported, the biggest company in the world just reported its best quarter ever, breaking all the numbers, and the stock, I can't remember, I don't think it was down, but maybe it was up like 2% after, or something.
It didn't move like you would thought it would have.
Right, and that was like my sign. I was like, okay, like that's more important than any of the numbers they say is the market reaction. So more important than Intel's numbers or Apple or Facebook, the market's reactions have been like, hey, we're here, we're back. We've been on the sidelines for the past year and a half. We're ready. We don't really care. We're going to buy this up anyway.
That's what I'm seeing. And if you look at the market internals, everything has been strengthening up. Breadth has been improving. The number of stocks making new highs versus new lows has completely reversed and has gone the other direction. You look at this market and the internals have greatly improved, and a lot of people out there want to be really, really bearish on the market. And I keep saying, I'm not. I'm looking to buy dips. And even today, we have a little bit of games here today, but there's really nothing going on. Volume, it's 28 million shares. We're 2.5 hours into the day. There's no volume behind this. They're just playing games here. We have, 5 Fed speakers scheduled today. no big deal. The market's just listening to what they have to say and probably just chopping around. I think it's only a matter of time before we take
They
off.
don't know. Why do they talk so much? They don't even have anything to say. I mean, Powell said it again yesterday. He's like, yeah, I mean, this is our plan now, but if inflation shoots back up or if inflation, employment, like obviously all this is going to change is that, so it's like, it's so silly that they have these guys come out every day and the market's going to move. Oh, you know what else was super silly? I'm going to pop up your charts, Mike, real quick too, because we only got a couple of minutes left and I want to give you some time to just run through any stocks you want to talk about. But how about Google going down like 7% today on the news that it's AI, like missed a question? It's like, isn't that the whole point?
It just wasn't. I listened to that. It just wasn't a good presentation. I mean, I actually took the time. I listened to about 30 minutes ago, and it felt like they rushed it. Does that make sense? Like they were.
It does, because I'm sure they saw all the buzz that ChatGPT and Microsoft is getting. But here's my point: is that like, who cares on it? Because the whole point of AI is that it like makes mistakes. You teach it, it gets smarter, and it's freaking Google. Like you think they're like, even if they rushed out this thing, like I think 7%, however many billions of dollars, and
dropping before that happened. It was already weak going into it. Again,
you're right. Tech has been weak. Tech has been weak today in general.
It was already dropping pre-market, and again, they just didn't hit them. They just didn't hit it out of the park. Microsoft's got a leg up on everybody now with ChatGPT because that's ready to go live. Google's in testing phase. They're still trying to figure things out, right? And everybody's going to use the word AI. AI, by the way, is the new NFT, the new crypto. It's your new thing right now. Anybody that says AI, everybody.
I wrote an article about that. It was cannabis 5 years ago, and it was crypto 3 years ago. It was metaverse a year ago.
Benzinga AI.
Yeah, next time you come on the show, Mike, it's not going to be me. It's just going to be an AI talking to you.
Go. I really think you want to look. I've been, at the strong names. We traded Tesla today, and I traded a couple of times, had nice trades on it. And these are the type of names I think are going to eventually go higher. I love Tesla. Once it holds above 200, it's right back at it here. I like it for a move up to the 227 area and test that 200 day. It was a good report. They bought that report. Whether they'll have problems or not, as you pointed out, next quarter with all the discounts and they may have a drop in their profitability on EPS. Remains to be seen, but we'll worry about that in 2.5 months. This is not something to worry about here. In the meantime, it's got momentum.
Well, even is Tesla green today? Even while the Qs are down. I mean, yeah, that's all right. So, I like Tesla's my one. Those like growthy just names. I think like really get hit harder by high interest. I mean, you even have Elon Musk like publicly complaining about interest rates, where like it's just. Come on, like it's 4%, like it's historically normal rates. Like if your business can't, but I'm wrong all the freaking time, Mike. So I like hearing the other side and seeing Tesla green today. Like I'm starting to maybe just be like, hey, like everyone else is going to be bearish this name. Maybe I go the other side. I don't know.
To me, it exploded. It was down, then it exploded higher, and then a lot of volume came flying into the calls, and I just grabbed the February 210 calls, made a nice trade, then went into some March 220s, made a little bit on that and got out when the momentum came out of it. And the name looks good. To me, this looks like a great name moving forward. And again, 200 is a huge level. It's on it right now. That's a big emotional level. You can even see here on the chart when you look at it, you can see that that's the level here that we kind of danced on. And then 210 will be another big level for it, but then ultimately I think it wants this 227.
Yeah. Wow. I mean, incredible run Tesla's been on. Mike, unfortunately, we are running out of time here. You got any other
I would not lose track of Meta. I know a lot of people don't like this name, and everybody thought they're going to have a crappy report. They had a great report. And a $40 billion buyback, which make no sense to me, but that's beside the point. You see the 8 days still sitting down here, 10 plus bucks. It was over 20 bucks below it this morning. It's just resting here. Look at this nice flagging pattern. If the 8 day catches up or it comes down and taps it and bounces off of it, a great entrance, I think Meta goes higher too.
There you go. So, Mike, you sound pretty overall optimistic right now, specifically like Tesla and Meta.
Yeah, I mean, I overall like the market. The semis have been very strong. When the semis are strong, the market tends to be strong as well.
There you go. All right, well, options, Mike, where can folks find more from you?
Find me on Twitter @OptionsMike, or you can want to join us, come to smartoptiontrading.com. You sign up for $25 with us for the first 30 days.
Awesome. All right, Mike. Well, thanks again for coming on today. Enjoy the rest of your week. We'll get you on again soon, all right?
Thanks, AB. Bye, guys.
Peace. All righty, y'all. Options Mike, go ahead and give him a follow on Twitter. It is 12:02 p.m. Eastern, 2 minutes afternoon here. You can see it's a nice sunny day here in Detroit, Michigan. So that's good. Just real quick before we get to our next guest, I see hanging out backstage. Just because I Options Mike there mentioned Meta's buyback, and I mentioned buybacks at the top of the show because it's just something Biden talked about last night. Because I'll be honest, I kind of had to educate myself earlier in the week about why buybacks had such vocal critics. And so essentially the idea is that from an economic perspective, right, if you're just talking like micro, macro, econ, the idea is, right, a company starts making money, increases in value, turns a profit. Now it has more money to spend on research and development, on innovation, on paying its workers' wages, hiring more workers, expanding, right? Like buying a new factory, creating new jobs, all this stuff that benefits the economy, that benefits people. Instead, companies now can choose to do a stock buyback and take some of those profits or some of the money that's coming in and essentially artificially prop up the price of a stock, right? If you have 100 shares available and the company goes out and buys 20 and now there's only 80 available, okay, now there's a smaller supply, so now the price is higher. And I don't necessarily, nothing's black and white. I don't think stock buybacks are great. I don't think they're terrible. There's other ways you can return values to shareholders. Again, by putting that money back into your company. I think a lot of people would rather see, if you're super bullish Meta's future, wouldn't you rather them see that, but then put that $40 billion back into Meta and building the metaverse and doing all these things that Meta's trying to do instead of just buying back the stock? But I don't think it's necessarily always like bad or always good. I think what I will say, and to Mr. Brandon's credit, Mr. Biden's credit, is that they have gotten really out of hand the past few years. Last year, more than $1 trillion, U.S. companies spent more than $1 trillion buying back its own stock. For context, the U.S. GDP is like $22 trillion. Was 3 or 4% of the entire GDP was companies announcing how much stock they're buying back. So it's like, how does that make, whatever. So, Biden essentially just said he's going to try to make it harder, increase the taxes that companies would have to pay on it. Again, the argument is always like, okay, well, if they don't do buybacks, they could just do dividends, which makes people want to go out and buy the stock. There's a little bit difference in how buybacks and dividends work, like tax-wise, for the executives of the companies. So essentially, if you're, a Chevron or Exxon executive and your bonus, your compensation package is dependent on the stock being above a certain price, and then you can execute this option, and you're the one voted on the stock buyback, you're going to want to vote on that stock buyback, and then you just have to pay, you get the capital gains tax, which is better. Dividends, you have to pay like an ordinary tax rate because it's taxed as income. So it's kind of, the stock buybacks thing is kind of a loophole for executives and owners of these big corporations to be able to pay themselves essentially more money. And again, they're the ones voting on it. So do you really think if you're a shareholder and the dude voting on, okay, so if I vote yes, I'm going to make $100 more million this year than I would have. But if I vote no, it might be better for my shareholders long term because we're putting that money back in the company. You know what? I'm going to do the first thing. Oh, and by the way, for Chevron, Chevron just announced a $75 billion buyback, specifically for these oil and energy companies, they haven't been expanding operations. And we've talked a lot about why that is. And a lot of that is because people assume it's because of government. Biden doesn't want companies drilling and stuff. The companies themselves say it's because of investor pressure to maintain capital discipline. Essentially say, why would you go out and start drilling more oil, start increasing the supply when we're selling gas for freaking $4 a gallon right now? Why would you do that, right? So when Chevron makes all this money and gas and demand is high and gas prices are at all-time highs, instead of going out and drilling more oil or expanding operations, making new refineries, it just does a stock buyback and the executives and shareholders get paid out. Meanwhile, we're still paying however much we're paying for gas. And again, the argument from an economic standpoint is that in like a true free market, whatever, that money would then be going back because prices are higher than normal right now for gas. So they would want to make more gas, sell more gas, which would bring prices down. But that is not what we're seeing right now. Again, so I do appreciate Adam Aaron should run an oil company. Yeah, I guess. Max 20%. Okay, so I know there's some no tax in a deferred account. Okay, so I apologize. I may have gotten something wrong with the tax difference between dividends versus stock buybacks, versus just like long-term cap gains in general. I don't know exactly, I guess, how dividends are taxed in every, but I know there is some benefit for, there's a reason why I guess stock buybacks are preferred for like the executives compared to dividends. I'm not sure exactly why that is. EKS, you might know. But all right, guys, I've kept our next guest waiting too long. I see him backstage. Stephen Hode is going to join us, I believe, from Europe. So Stephen is a trading and risk management professional. He's got more than 25 years experience on trading floors in the city of London. So I'm excited to talk we'll talk maybe some commodities. We'll talk what's going on in Europe. So without further ado, let's give Mr. Hode one of our very special Zinger Nation welcomes. And when we come back, we'll be talking some Europe. Mr. Hode, welcome on Benzinga Live. How are you doing?
Hello, Aaron. Thanks for having me.
Of course. Are you joining us from London right now?
No, well, I'm about an hour south of London in a city called Canterbury. That's where I live and my home office. So I moved out from London for a bit more of a peaceful life. But yeah,
got it.
Canterbury, it's coming towards the end of the day.
Okay. Yeah. I mean, thanks for joining us. I know it's probably about what 6 p.m. for you.
Yeah, just after 5.
Okay. So real quick, do you want to give yourself just a quick introduction, like who you are, what you've done in your career, and kind of what you focus on? I see the stop hunter, so I want to know, exactly what that means as well.
Yeah. Okay. No worries. Goes back a long way. Mid-90s, started at Merrill Lynch in fixed income, German, Japanese banks, in between that in all sorts of markets, and then most of the career was spent at Koch Industries, which I guess you've probably heard of, Charles Koch. Coming up with strategies, trading strategies from across metals, energy, all those type of products.
He's not the most popular guy here.
I know. Yeah, he's not very popular over here as well. He does bend opinion, but working for him, it was a great career.
You made some money, I'm sure, right?
Yeah, I did all right. Yeah, he actually allowed me to retire in my sort of late 30s.
Okay.
And that's where the stop hunter comes from, because I gave up and then people would ask me how, to trade or could I trade for them. So I started the stop hunter business, teaching people, running their own money. So I sort of run a family fund, trading all sorts of markets, but also teaching the professionals still how to trade. So over here in the UK, I teach technical analysis to, like I say, banks, financial market institutions on the Society of Technical Analysis program. Teach at universities as well and postgraduate about financial markets. So really my retirement from Koch was pretty non-existent. I'm busier than ever really at the moment. So
yeah, well, I'm sure the work's a little bit different. I don't know if it feels more or less fulfilling for you. It might be more or less money, but it sounds like either way you've had a lot of experience in the markets and doing things. So specifically, I know Coke and oils. Were you trading energy, or was it is it outside of energy as well?
It was both. It was in the energy side and over into the metals. So they're big on copper, gold, those sort of products.
Okay, you're the perfect. Oh, sorry, go ahead.
No, it was covering the whole spectrum of what he has under his umbrella of commodities, which is vast, all the way through to paper products, to the chemicals, the whole lot. So.
I was going to say you're the perfect guy I want to talk to right now. I didn't even realize that you had traded copper and some metals in the past.
Yeah.
Have you heard, I don't know if this might just be in the US, or on Wall Street here, have you heard of a phrase called Dr. Copper?
Yes. Yeah. That's
Okay,
what
so
they call it. It's a well-known phrase.
Okay, sorry.
No,
I-
it's the red metal. It's in every, because copper's in everything. You know, it fixes, you know, houses, technology, tech. You know, it's a barometer for financial and economic health. And you know, China hoovering up 50-60% of the copper. You can learn what's going on in China just by watching the copper price sometimes. So yeah, know a lot about copper.
Okay, so that's what I wanted you to explain, kind of what this idea of Dr. Copper is, and essentially, like you hit the nail on the head, that it's just, you know, because copper is used so prevalently in like our global economy, whether you're talking about construct, you know, whatever it is,
Yeah,
that when copper prices are going up, that's usually an indicator that there's a lot of economic activity, and when it's going down, usually that means economic activity might be slowing.
yeah. You watch the supply coming out of places like Chile. Often they'll have strikes and stuff that can impact supply, and it takes a long time to get mines up and running. 5 years, huge cost as well. So supply at the moment is no problem. It's where the demand is coming from, and like I say, 50% probably China, 20% the US, the rest of the world, you know, hoovers up the rest. But you know, at the moment, you know, China, you could see the deterioration there in their economy as the price of copper came off. But now, I'm more confident copper this year ahead, and that brings with it a lot of other metals and interesting products, and that allows you into different sectors and ETFs and all that to watch, you know, for 23. So quite an exciting year ahead, I think, for commodity-based stocks and markets.
Yeah, and so, Stephen, a couple of things I'm curious about. So I know you touched on, you know, you teach some technical analysis.
Yeah.
Give it. I want like the full honest truth here. How much of, if you're doing like when back in your days at the Coke Industries, if you're doing like an institutional trade, like, are you using technical analysis like to determine that trade like 100% of the time, 80%, or there's a lot of it too, like, okay, I see, you know, I think copper prices are going to get, you know, be expensive the next month or so. Is it like 50-50, or like, well, what's your balance of using technical analysis versus maybe like other catalysts you're seeing for a trade?
Fair question. When I first started at Coke, it was a fundamental, you know, shop, and they actually rolled me out. I had to come to Princeton University and sat in front of hundreds of fundamental oil traders, big Texan guys, and to try and convince them that technical analysis was a useful tool to, you know, add into your armory. And because of the change of the flow of money into commodities at that time, you're talking the early 2000s, you know, it became a lot more systematic. You know, the technology changed, and that allowed technical analysis to become more of a tool. So in the early days, you were 100% fundamental, but now you can, you know, and I was actually tasked with coming up with, you know, technical based strategies and approaches. So you've got the whole spectrum at the moment, all the way through to 100% automated. I've got a lot of oil strategies that I do, gold, the more liquid commodities, easier to trade technically. Those more, you know, rare illiquid commodities, maybe you're back more to the fundamentals behind why they're, you know, doing what they're doing. So it's a bit of a blend, really, and different traders have different setups. I'm probably more towards technical analysis, but I know how the fundamentals work, and I build that into my trading.
Yeah, I like that, because I kind of, for myself, and I don't, you know, when I'm trading more just for fun, little options trades in my personal account, I think I like to use, like, I will rarely put out a trade 100% based on the chart or 100% based on technicals. If I think like, or on the fundamentals, sorry, if I think like the fundamentals make sense, and then I look at the chart and it looks like a good entry, but, you know, then I'll do it, you know, whatever. And if I like to kind of have both, look at both lenses. So that's just why I was curious from an institutional perspective, because I do find it fascinating. You have like traders for big banks, you know, trading these crazy sums of money, and at the end of the day, they're just like looking at chart. You know, like some of them are really truly like 100% technicals, and I find that fascinating in itself.
Yeah, no, I've done that. I've done that role, sitting there, just you come in, turn your computer on, and you now with technology and programming, which I do a lot of, you can just automate those charts out. You sit there, press the button, let it go, and hopefully at the end of the day you've made some money. So yeah, it's a whole new world of trading.
Yeah, I'm sure you've seen a lot of development in terms of just technology throughout your career.
Well, when I first started, I had to hand draw charts.
Wow.
And that's when you were looking at daily charts, and that technology just wanted. Merrill Lynch, when we first started there, it was, the internet was a new email, that sort of thing. So you learn the ropes the hard way, and then I think that's helped my career as I've progressed, because you've learned the ups and downs, the knocks, the hard knocks.
Have you enjoyed your time here in the States when you've been here at all for work?
Oh, I have, yeah, massively. I spent a huge amount of time in New York, Chicago, Houston, and with Coke, his head office is in Wichita. So I've even spent some time in Wichita, which was
that's what Wichita is more from where I'm from. I'm from Missouri, so I'm from down. I played like tennis tournaments in Wichita growing up, so I know how. There's not a lot there, but it's still nice. I mean, there's a big difference between Wichita and New York City, huh?
Oh, huge amount, yeah. But we were well looked after by Charles Koch, and he showed us around the sites, and I really enjoyed American time, and that it's great place.
I'm glad to hear it. So, what about I just asked you about America. Now I'm asked about your home country. So I don't want this to be a hard question, but I've been seeing a lot of stuff, and this might be overblown, just headlines, media. Is the UK really in like that bad of an economic position compared to other European countries or compared to the United States?
No, not at all.
Not at all, you said?
No, the FTSE 100, FTSE 100's at its recent highs. It's made up of energy, mining, tech, finance stocks, all doing well. Yes, our energy prices are high. You said earlier, probably our energy bills probably 4 times higher than what they were maybe a year ago. So a few small, the smaller business is probably finding it hard, but really I know there's a lot of government intervention and propping up stuff, as we saw through COVID. They spent $450 billion over here on getting us through that lot. But it seems that despite high interest rates, high inflation, which seem to be slowing down over here, it's business as usual, really. And although Brexit didn't work as well as it could have done, the government probably didn't have a great plan. It's a good idea, but they didn't follow it through. So they're still working over that, and that can create a lot of opportunity out there. Hasn't dented our financial services sector, which is still one of the biggest in the world. So for me personally, and when I see people on the street, people are still coming to the shops and buying stuff, and it's a bit more expensive now, but they're still living the life. So I don't think it's bad. Even go over to Europe as well. Their stock markets, the DAX, the German one, still pretty decent, doing well. Stocks are recovering. People see a lot of bargains out there. It's got cheap with the pullbacks in the prices. Now's a great time to be getting in. So I don't think there's the fear there at the moment. Maybe it could get worse, but there's not the fear there. So it's okay.
Yeah, I mean, and just to be clear, when I was talking about the energy prices earlier, I was saying how like there was a point where, okay, here's what I didn't like essentially is there were a lot of people who were bearish here, who were just like essentially wanted the market to crash or come down. Yeah. But every month their reason was different, right? Like for 1 month it was, because of China still being locked down from COVID and zero COVID policies and problems there. And then like the next month it was because of out of control inflation in the United States. And then the next month it was like this energy catastrophe that was not happening in the UK, but going to happen in like 3 months. And I was just like, okay, I think that's a little bit overblown. Like I'm sure the prices will be, too high or whatever, but essentially you're showing the chart of like the forward prices for energy, and it's like a parabolic chart, and it's like, yeah, but typically those charts like eventually come down, right? They're not gonna, they don't keep going up, right? So I was always kind of on the side of like, I'll be monitoring that energy situation, but I'd be surprised if it's as bad as people are saying, and that's I've been vindicated in that view, because I don't think the energy situation has been as bad throughout the winter as some people anticipated back in October or September.
Yeah, it's not nice having to pay 4 times the amount,
No.
but it's not finishing you off, and we're still working. The lights didn't go off, it's like I say, business as usual still, and we've seen sort of prices coming down a bit actually in the last month or so. Anyway, across that, and like I said, there's been government help and subsidy for businesses, small businesses, households that are struggling. So, they smoothed out the bump, and like I say,
there's obviously been a lot of stories coming out of the UK the past, year or so. We had from an economic standpoint, you had the day that like the sterling dropped at a crazy amount over the week at like the Sunday, or for me, it was like Sunday night or whatever before the market opened here. And then obviously different leadership. But I just kept seeing stuff about people talking about, I forget who it was. There was one big bank here. I want to say it was either Goldman Sachs or Credit Suisse or someone who put out a thing the other day that was like, we now expect Europe to narrowly avoid recession, except for maybe the UK. And I was just like, why are they singling? Why is UK getting slapped in the face?
They're haters.
Is that it? Is that why they just hate you guys, or is it?
Probably. Everyone likes to poke us down.
That's what it seems like.
Yeah, but I think that like I said, the Brexit thing upset a lot of people, stirred up a lot of those type of banks and institutions. But say like, hey, this is what you get 6 years later. Now you're going to go into recession when these other countries aren't. That's like kind of what they're rooting for, right? And then they can blame it and say, see, you shouldn't have done that. Yeah, exactly. But we're no worse off. If we go over the channel here to France or Germany, there's no difference really. I don't think it's
so. Okay, since you're energy guy, at least you know a little bit about energy. Yeah. Well, let's talk about the difference. Shoot, you could probably even do it here in the United States because you spent time in Houston. Like Texas does stuff energy-wise a little different than other parts of the United States. Is that kind of similar to how, France does things a little bit different than Germany, who does things a little bit different than the UK, energy policy-wise?
Completely different. The UK is very different to mainland Europe. And, we have the Ukraine-Russian conflict thing going on. We only get about
what's that?
What, the Ukraine-Russian conflict? Never heard of that one.
No, I don't.
No. But the thing was the energy, the gas pipeline stuff. Over in the UK, we did only get about 4% from there. So that conflict actually doesn't really impact, the UK whatsoever. And we get our supplies from every, different places. We're also, we got
Germany was importing more, right?
Yeah, Germany was about 45%.
And you were 4%?
45%.
No, I know, but I'm saying in the UK was like
4%. It's around about 4%.
Yeah, so 10 times. So Germany was importing 10 times the amount of Russian oil or natty gas. Was it natty gas or oil or both?
Yeah, nat gas, oil. They take a huge amount from. They're much more reliant on it. Where we got Brent crude sitting offshore. Our own nat gas type supplies. We have other stuff with countries like Holland, which is just over the channel. There's a lot of different markets, companies, pipelines, infrastructure that was very national. You go to Italy, France, or Germany, they try to link it all together with these different pipelines and projects. It is a very different setup between the UK and Europe. But, each, like I say, individually has its own policy and way of pricing. France controls its pricing differently, is much more sort of confrontational in its approach rather than, say, a German setup.
What would you do if you were in charge of energy policy in the UK?
Actually, not too much. Actually, I think I suppose they're moving over here a lot to cleaner energy. So you'll see a lot of new wind farms, solar technology. They started doing like the EV battery plants. One just went bust, actually, a big government project. But the reliance are moving on to these new forms of energy. So we're pretty much independent. So I think actually the policy over here is pretty good. We've got enough oil to last if we need that, with Brent. And so It's okay.
Yeah, I think COVID, what it did was it exposed a lot of supply chain issues as potential like national security issues, where like
Yeah,
we here in the United States is like, shoot, if we're reliant on China for like all these medical supplies and they shut down their economy and then we don't get our medical supplies, then we have a problem. It's like we're screwed. And it's like,
yeah,
so I think a lot of leaders around the world are figuring out where in their supply chains they can try to domesticate some things. So,
yeah,
because obviously, we're still a global economy. It's going to make sense to do international business and import some things and export other things. But you want to have some domestic supply of energy is pretty important, right? Energy. I mean,
yeah, exactly.
you need energy, right?
Yeah, no, we are. You go to the pharmaceutical side. I suppose we're more linked to the US through your Pfizer's, your AstraZeneca's, Moderna's, those type of companies. So that was our sort of supply through the COVID period. Maybe on the sort of food stuff side, we struggle a bit more because a small country don't grow so much agricultural stuff. We're more reliant. Wheat prices smashed up when the Ukraine thing kicked off, impacted supply a bit. Prices, in corn, wheat, those type of products, the end supply chain went up a bit. But, I think, the UK's always been self-sufficient and had a lot of, people knocking at the door for centuries, and we've always coped. So,
yeah, and I mean, I think that's kind of where I am in terms of like when you have these people that are really bearish that want to act like Chicken Little, the sky's falling and all this stuff, and I'm like, we've always kind of been okay, right? Like we've been through this before and been okay on the other. We've come out on the other side, right? The sun's always come up.
It's that British spirit, stiff upper lip and all that.
Yeah. So Stephen, going to or sorry, is it Stefan or Stephen?
Stephen.
Yeah. Stephen. Okay. So going well, real quick, because we only got a couple more minutes, and I know it's late for you, so I want to get you on. I'm sure you got to eat dinner and whatnot. Interest rates, central banks around the world right now. I mean, are you guys kind of looking at the Fed here in the United States as like a leader, or no? That face looks like no.
No, definitely yes. Yeah.
Okay.
But our rates come out always, a few, just after yours, and I think the policy makers do, tweak their ideas based on what they're seeing in the US. So, we started to see that slow down in inflation. The numbers were quite good over here. That dropped down there. They did put interest rates up in the UK as they did in Europe, but they're sort of talking maybe more of slowing down those interest rate increases over this year. But we're going to be watching very closely what's going on in the US. We always do. It's, the world's biggest markets. It makes sense to see what's happening over there.
Yeah, I mean it'd be tough. I feel like if you're trading and doing markets and stuff in Europe and you're just like, oh no, I don't know what's going on in the US, you'd be probably a step behind, right?
Yeah, correct. So even like the dollar, I trade a lot of the dollar index futures. That's been really strong, and then weaker in January time, which allowed a lot of markets to, it helps commodity markets and other areas over here to take advantage of in currency trading. So yeah, always good to watch.
Well, I think there's this idea, and you mentioned inflation coming down, and we've been seeing that here in the United States as well. But we've surprisingly seen very strong jobs numbers, despite the fact that we've raised interest rates throughout the past like few months or so. So I think some people are now worried or anticipate that the Fed will keep interest rates for higher than longer what was initially anticipated. Mm-hmm. So like 5% for like a year versus the bond markets were initially pricing in that they'd start cutting by the end of the year. Do you think if interest rates do remain higher, that will have a negative impact on like equity markets?
Well, the problem over here is more to do with mortgages. Those high interest rates, there's a period in April time that you're going to see about 40% of all of the UK mortgages will roll over into this higher interest rate environment, which has been staved off for a longer time. So it's going to seriously put the cost of people's mortgages up. That could impact spending, and it might just keep things like I said, on that slower path over the rest of of the year as people cope with those increased payments to go along with the energy costs as well. But yeah, I'm confident that I think things are going to slow down a bit, but it might just take a bit longer. I think they're going to ease their way back down rather than do anything dramatic.
Well, there you go. Well, Stephen, this has been a great discussion. Thanks again for hopping on today, giving me some of your time, because I know, like you said, you're a busy guy even in your retirement. In your retirement, you're staying busy. That's hard to do.
Yes, it is. I'm busier than ever. Actually busier.
You golf?
I do, yes.
All right. Well, once it gets nice out,
I've got to get to a single handicap this year. That's one of my goals. 23.
That's my goal too. That's my goal too. I want to do I've never really been to Europe, so eventually I want to do like a nice like historic golf trip out there. So I'll let you know when I do that. We'll get around
down near me. About 20 minutes drive from Royal St George's, which hosted the British Open a few years ago, and there's about 2 or 3 other open courses. You want to play some links golf, no better place. It's either Scotland or down here, and I've got them all on my doorstep. So yeah, that's where I play golf.
All right, let's do it. I love that, because we actually do. They've built a couple. I'm up here in Michigan, and they've built a couple courses, link style, to replicate. I went up to Wisconsin to play Whistling Straits, which, you know, they have an Irish course up there to try to replicate like the links courses and stuff. So I love it. I can't get enough of it. I can't wait for it to get warmer out here so we can start playing again.
I know. Well, we wait for the Masters in April before we start getting the golf clubs out, because it's too cold and wet over here normally. So a couple of months and I'll be on it a lot more.
It's the Masters. It's the perfect time of the year to start getting excited about golf again, right? Because you start watching them, and then, you know, the next couple weeks it's going to be warm enough that you can get out there and play.
Exactly that. Yep.
All right, Stephen. Well, enjoy the rest of your day. I'll reach out to you. I got to get you back on again soon. Next time we have some developments in Europe or the energy markets or anything, we'll get you back on.
Yeah, brilliant. Yeah, no, you can all follow me on YouTube in the meantime. So I've got a big channel that I run there. So
what is it? Is it called the Stop Hunter?
Yeah, at the Stop Hunter, you can find it. I put a load of market analysis and you know.
All right,
everything.
Great. I'm gonna drop that.
Is downloaded in there for you. So
okay, I'm gonna drop. I'll drop that YouTube link in the chat so people can go out and subscribe to your channel.
Brilliant, thank you. It's good to be speaking to you, and thanks for having me on.
Of course, thank you. Enjoy the rest of your day.
Thanks, Aaron. Have fun. See you.
All right, guys, that was Stephen Hode joining us. Going to drop his YouTube in the chat. Go ahead and give him a subscribe. I see our next guest hanging out backstage, and I see a bunch of people in the chat ready for him. TMI. No, not too much information. But the masked investor. I think because of all the excitement I see going on in the chat, we've got no other choice but to get straight to it. I can't keep you all waiting. So without further ado, let's go ahead and give the masked investor our very special Zinger Nation welcome. When we come back, we'll be chatting with TMI. How's it going, the masked investor? How are you doing?
Not bad, my man. How you doing?
I am good. Thank you for hopping on Benzinga with us today. Where are you joining us from?
No problem. Coming hot from Toronto. And when I say hot, I actually mean cold as all hell. So it's freezing right now, but we're chilling. How you doing?
I'm good. We're in Detroit, Michigan, so not too far from Toronto.
Oh, so it's cold there too. So you guys know exactly what time it is.
Yeah, exactly. I mean, it looks sunny and warm outside. There's an ice rink right. Oh, you can maybe see the lady ice skating right behind me. But yeah, it's still cold. So you're in the 6. That's what they call it, right?
That is correct. We are on the 6 right now. It is cold. Actually, no, it's not that bad right now. It was felt like negative 37 a few days ago, but now it's decent. It's like 0 Celsius is I don't even know, 20,
like 32. It's like 32, 35. Yeah, it's nice. Like I can walk around right now in the sun without like my winter coat on, but it's still a little chilly. Why, real quick before we get into the markets and whatnot, what's up with the 6?
Born and raised. That's where I'm from.
No, I'm saying why do they call it the 6?
You gotta ask Drake about that. I don't know. He's kind of.
Oh, he started that.
Yeah, he started that. Yeah. But there's 6 boroughs, and that's kind of where it really originated from, and then he just kind of ran with that one.
Okay, so it's more like that's more of a Drake thing, not like everyone from Toronto calls it the 6, and then he like embraced
anything
it.
That's basically a Drake thing. You can basically say he pulled from an artist that was basically previously saying that. You can go like Cardinal Official or a few other artists that came here before him, but he made it popular and then it kind of blew up in the States, and that's kind of where it stands.
Really? So are there people in Toronto that like don't love Drake for that because they think he like ripped a lot of stuff from other Toronto artists?
You're not gonna hear from me. I'm not gonna. Hey, look. If anybody's listening right now, I got nothing bad to say about anybody. I'm chilling. I'm not trying to. I live in some interesting areas right now, so I'm not saying anything about anybody right now. But anyways, how you doing? How you doing?
I'm good. I'm good, man. I don't know how familiar you are with Benzinga. This is Benzinga Live. We hang out basically from.
So you know what? The funny thing is, now I often see a lot of articles from Benzinga that I have an issue with. I often
Okay.
see a lot of, but I know it's not you. I know it's not you. So I'm putting you on the spot a little bit here. But
No.
I did want to come on and say, dear editors who are about who work with Benzinga, who work through Benzinga, feel free to speak a little bit more politely about retail investors every once in a while. You know what I mean? Feel free to uplift retail investors every once in a while. Not you.
Okay.
But the editorial staff. I'm just gotta. I said I was gonna come on here. I said I was gonna keep it real. I gotta keep it a buck. I tweeted some things
Yeah.
about Benzinga, so I guess gotta make sure I keep that same energy when I'm on here.
No, I'll be.
Hit it.
Go ahead.
Hit it.
I was just gonna say, I'll be honest, like open with you. Because I see a lot of this stuff, whatever.
I like you. Hey, I like you.
We are our audience, like who I stream to, whatever. Our audience are all retail investors. That's who we are. That's why I am.
Listen, I know how it works, but at the same time, you know what editorials are, right?
Right.
Editorial articles. Like I have a marketing background, so I know sometimes I see some articles and kind of like, y'all really just teed up that and swung a little early on that one. That's a little tough. So when we jump down, we just want to make sure, hey, we like.
Well, okay. So the only thing I'll say is, look, you got a marketing background. End of the day, sometimes you got to write a headline that gets clicks, right?
I know how it works. I work on YouTube too. I know how it works. People say click, but listen. But the only thing is this. Because I know you guys can get a highlight clip about this. You probably got producers in your ear right now talking like, yo, what the hell is this guy talking about? Click. I get that. But what I'm saying is just like, when we come on, we have to have some fun. We want to make sure that we do say, hey guys, look, retail investors are here. Trading's at an all-time high in January right now. But a lot of these highly shorted stocks right now sometimes get a tough name in editorials. So when I am on Benzinga, I just want to say, shout out to all the retail investors who are still in the market. It's been a tough 2022. The market got absolutely slapped. Things were looking tough for a long period of time. But as you can tell, January, things are looking a little bit different. The Fed Powell came out with a dovish FOMC conference, which shocked a lot of people. We've seen the market run. How are you feeling about 2023 right now?
I feel overall pretty good. I would say like on a scale from like 1 to 10, if 1 is as bearish as you can be, 10's as bullish as you could be, I'm probably like a 7 or maybe 7.5.
Are you thinking we see a little bit of pullback before we see higher highs?
Probably, yeah. I think just with with the interest rates where we're at right now, I don't see like the SPY like running back to all-time highs of 480 or whatever. So it's like, I think
that's a great statement. Do you think that if the Fed saw the positive job numbers and they keep the interest rates high, equity markets are going to get slapped short term?
I don't know if slapped is the right word, just because I think
that's my terminology, but a healthy pullback. After a
healthy pullback, maybe just because well, okay. So here's the thing: I'll pull up my charts too.
Hit me.
I think, and I was just saying this earlier with another guys. I think in growth specific names, right? You look at like a Coinbase or a Tesla that might be more.
I'm watching Coinbase right now on the charts. I'm not gonna lie to you.
For puts.
I got stopped out with puts on Coinbase during the FOMC, and I'm not gonna go back there for puts for a minute.
Okay. See, that's what I don't know. Like I don't have any open trades or anything right now. But I was saying at the top of the show, like, I could get talked into some like Tesla or Coinbase puts just because I think it makes sense with these companies that are super growth oriented. Coinbase does not benefit from 5% interest rates, right? Crypto doesn't benefit from 5% interest rates. Coinbase as a company doesn't. Yeah. So why the hell is it up like 100% in a month or whatever? I think, seeing a healthy pullback, whatever. But I think in terms of
I'll tell you this though, Coinbase, the chart for Coinbase, if you go back as far back, I think I have a community that kind of I was highlighting Coinbase in roughly December. I like to use the RSI, some different indicators as well. Very bullish divergence on the RSI from like late December into early January. So you can see a run coming. I saw it pushing to roughly about 55, 60. I didn't see this. I didn't see this crazy push here, but I do think we see a little bit of a gap back down there. I could see push in the near future, a little bit of pullback, but it's been on an amazing run. The only thing is this: if the SPY cracks that 418, 419, 420 level, I think we can still see higher highs with Bitcoin and Coinbase, Riot, Mara, some of those other equities as well.
Yeah, I mean, I think at the end of the day, like rates aside, jobs numbers aside, you got to look at what the market's doing, and if people are going out and buying Coinbase's stock, going out and buying Tesla's stock, that in itself is a sign, right? That's people.
How do you feel about Tesla? That's another stock that I love to look at, but everyone has a different opinion whether they're short or long. It's one of those in between bulls and bears fighting it out right now. Huge pullback over the last 12 I want to say 12 days, but honestly, like almost 2 months now.
Yeah, I'm Tesla, like you said, it's just very polarizing. People usually either love it or hate it. I'm actually kind of like middle of the ground. Like I personally right now, okay, so here, let me pull up my on Google real quick just to see the past few months. So yeah, in the last from its lows of 108 or whatever, like Tesla's up 83% from January 3rd to February 8th. So in like a month or whatever. So like you said, you said healthy pullback. I would not be surprised to see Tesla have a healthy pullback here, whatever. Am I in the camp of like Tesla Q? I think Tesla's going to zero. I'm super bearish. No, not really.
That Tesla Q came out crazy. That came out of left field. I was like, have you seen anything like that before?
Are you talking about the actual like fund?
Yeah.
It's like the inverse Tesla Q.
The timing of that was odd. I feel like it put a lot of people in a very odd position when it came out. Like markets were already pulling back. It just kind of like really put the pedal to the metal there on that downside pressure.
There's a couple of those now. I mean, you have like SARC, which is the inverse like ARC one and all this stuff. I don't get why someone would go out and buy Tesla Q or SARC rather than just shorting the other, fund. Like, I don't really know why you would do one or the other.
Someone's making money somewhere.
Someone's making money.
Anytime I understand what's going on in the equity market, I'm like, okay, who's making money off of this decision right here? But yeah, I definitely think Kathy Wood. I think ARC had the best quarter recently in the last year.
Oh, like return wise?
Yeah. I think they did pretty well, to be honest.
Oh, I mean, yeah.
I mean, they own a lot of Teslas, so Tesla went up 100%. They went up 100%. That's just how it works.
100%. I mean, look, it went from 30 to all right. Bad. So what about you? Said you're watching Tesla. What do you think about it?
Over the last, I was short Tesla until I was probably short Tesla a bit too long. Not actually financially short, but just the overall mentality. I could see Tesla ripping back up towards the 245 level, to be honest, before we do see more downside. If the SPY does crack up over that gap fill at around 420, 421. I still think we could see Tesla with some lower lows. Like if you look at how Tesla has improved over the last five years, just in regards to the price and the overall size of the company, it went up by like 500% when like Apple, Google, Amazon went up by like 200-300%. So there's still a substantial amount of upside I can see for Tesla short term, but I will keep an eye on that downside as well. I could definitely see this thing come back down to retest these lows eventually. Yeah, maybe higher lows, but
oof. Yeah. 100%. So I agree with you all there, because so where my cursor is at right now, this kind of level right here is that 240 level you're talking about. Yep. And that's where I'm at, where I say I'm more middle of the ground Tesla, where I'm not super bullish or super bearish it right here. Mm-hmm. I do think if I had to choose right now to buy puts or calls that are 2 weeks out, I'd probably buy puts, just because I think right here a little pullback wouldn't be great. Well, at the end of the day, if a stock's up 80%, if it stocks up 80% in a month, you're going to see some pullbacks usually.
Exactly, right? But I'm looking right now at roughly 206 specifically, and you can put this down the chart if you want to, 206.87. If I see a clean breakdown, a 15-30 minute candle over 206.87, this thing is going up.
Yeah, and so that's where I'm saying I would not be surprised again if it does go up to 240 whatever. The only thing I'd be surprised is if with interest rates and stuff whatever is if we see this thing continue to run all the way back up to 420 or whatever its all-time highs are now, split adjusted 1200 what it was before. It's freaking Tesla, so we've seen it happen before. We can see it happen again. But I would just say to anyone who might be out there watching the market the last month or so and thinking, okay, we're about to see the market be like what we saw right after COVID in May 2020. I don't know, because I think it's a little bit of a different environment with higher interest rates. I think realistically, I don't think SPY's gonna be coming back down to lows. I could see a pullback from here, but I think kind of just trading, or 400, 420, 450, whatever, just around here for the whole year. I don't know if we're gonna be breaking all-time high. I hope we do. I don't know if we are though.
Yeah, I think I'm gonna be keeping an eye on the next CPI data that comes in. I think I have a feeling it's coming in hot. The next CPI
what'd you say? Sorry.
I have a feeling the next CPI data report's gonna be coming in hot.
Yeah, I mean, because the labor market's been tight, I think it would make sense. So that would push the market down. I mean, the expectation would be
temporarily, a little bit of healthy pullback. I think that could be it right there. And with this huge bullish rally, I know that I almost got whiplash from being bearish to within 2 weeks everything flipped a switch. It was bullish. And when things switch bullish, it means it's been bullish for a long period of time, but you only realize it later. And now it's kind of like at a pivotal point in time in the market again, whereas the SPY is kind of sideways trading for the last 3-4 days here. We're going to really see, in my opinion, in the next 2 days here, 420 or 410 again with the SPY. So we'll see.
Yeah, and I mean, again, like 420, maybe we go up there, and then that's where we get that pullback. I don't know, but it will be, kind of like this pivotal point right here. I feel like we're either going to be more people, like you said. So you said that you were bearish, and then you basically had to flip a switch. I still think there are a lot of people out there that are like bearish. They think the market has to go down, whatever. But the more the market goes up, the more those people are forced, like you are, to like, you got to switch, right? Or you're just getting chewed up more and more. So if we see 420, then we see 430, right? Like, it might not matter that people are worried about interest rates or whatever, because you might have all these people essentially like having to cover their shorts, whatever it is.
And that's more, it right there. I think if we get a clean break, and I was trying to break this down just this morning when I was streaming. If we get a clean break, for those of you guys who don't know, you guys can check me out, The Mass Investor on YouTube. We do stream every day as well. But if you see a weekly candle close roughly above 421, 422, and we get some follow through there, I can't swear on your channel, but shorts are, you know what?
You can swear on here as much as you want. Shit.
Oh, okay. Yeah, shorts are fucked. If this, because I don't want you to get demonetized. I don't know how that works, right? Because YouTube these days, you never know, right? But like, if you see a nice clean follow through there on a weekly candle, I'm really watching the weekly outlook right now at the SPY, because it just gives me, the larger time frame is strong. The print, I can see shorts in some trouble, and that can mean, you see that upside for several different stocks across the board. We talk about Coinbase, like it doesn't deserve to be here. You think this is upside? If you see 430 on the SPY, Coinbase is going to 100. It's just one of those where it's like things can pop off very quickly, right? So interesting, very interesting.
I agree with you, everything you're saying. This has been a great discussion so far. We gotta get you back on the show more, man. I want to talk about you for a second though. So
Hit me up. Like, hey, listen, we got TMI Tuesdays. Next time we have me back on a Tuesday.
TMI Tuesdays?
Yeah.
We'll do TMI. We'll do TMI Tuesdays. Like, how'd you get started doing this? How'd you get started streaming? How'd you get started like in the markets? What's your background? I just want to learn more about you real quick.
Yeah, no problem. Markets was a while back. I have several friends that work for banks or several institutions, so they've been in for a long period of time, and they always kind of just brought me along. Really, first time getting to the very bullish market was that cannabis run. Do you know about that cannabis run that happened in the market?
Yeah, first like pop bubble, that was like before COVID. You're talking about like 2018 or something, right?
Yeah,
like when Tilray went crazy and then just went straight down.
Aurora Cannabis, APH,
GW Pharmaceuticals.
Exactly, right. So when all those cannabis things are popping,
I'm hip. I know about the pot stocks.
Yeah, we had like options for a year in advance that we held shares a year in advance that. So we were really in early on that, and then that kind of popped off, and that's when things really started shifting from just investing into trading more often, options trading specifically. And then from there, I've just been kind of hooked, right? COVID obviously kind of kicked things off because you kind of can work from at home. That's when I kind of started YouTube. Plus AMC started popping up as well. Shout out to AMC out there. If you guys have not yet, you guys should definitely go to a theater near you and go check it out. You don't have one in Canada, but if you guys are in the States, you guys could definitely go check it out. And then, from there, it's just been kind of like daily streaming. We kind of cover several different plays every day. We try to do one play per day in the market right now because it's been a crazy market. We had a huge bullish 2021. No matter what you bought, it all went up. And then 2022, people really tried to figure out, okay, how do we keep retail engaged in this market? Because if retail comes back when everything's up and they leave every time everything's down, it's a miss. You know what I mean?
Right.
So keeping people engaged when things are not looking great, to me, is the key thing. So we haven't missed a streaming day in about 2 years so far.
Holy shit.
Non-stop.
So every weekday?
Every day. Monday, Friday, Christmas, Thanksgiving. We don't take a day off.
Really? Wow. That's impressive. And so what would you say you're kind of like? I feel like every investor trader's got like a different style. Like, what's kind of like your style? Are you focused on just like momentum names? What's moving? It sounds like it sounds like that you're okay being open-minded, being bullish, being bearish, being kind of, versatile. Because if you get locked into like, all I do is buy calls, you're going to get screwed in a bear market. If all you do is buy puts, you're going to get screwed in a bull market, so it's like you got to be kind of have that open-mindedness.
Yeah, so I heard you with your guest before was talking about TA. I do personally love using TA. I think that's, what I go based off of the most. But I tweeted out just a little while back that I have been going to a lot of plays recently, a lot of charts recently with a bearish bias. So even coming off of the last 3 months, I'll just talk about myself for a second there. My bearish bias is slowly coming off, but I still have it with me. But I do like to go into every chart open-minded and just kind of break things out. I like to use support and resistance levels and kind of play between those zones. So like today, my play of the day was really just SPY push to 411 and then calls from that bounce. Right now, we do have SPY currently sitting at, I don't even know, to tell you the truth. I had to exit my calls.
412, 410.
I'm done. Oh, shoot. I guess maybe I shouldn't exit my calls.
412.
Dang. Yeah, I should have held on to those bad boys a little bit longer. Anyways.
Well, no, sorry. Not actually four. It's 411.75.
Okay.
Yeah, we've come off the lows of the day a little. Here, I'll pull up the 2-minute chart.
Yeah, I exited at 4. Okay. So I was looking for a bounce at roughly that 411 region. We came back a bit down below it. I got some quick calls, but I wanted to jump off before I came on here because I didn't want it to kind of go the wrong direction. Distracted. There. But then now I'm looking at this thing pop back up. I should have held on a bit longer. Anyways, but yeah, support and resistance levels to me are my go-to. That and volume. That and volume to me is just 2022, end of 2021, early 2022. I really started looking at volume king and that more often. That was game changer.
Yeah, and another thing that you said that I loved is you said your bullish or your bearish bias is slowly starting to get away, and I think like being aware, acknowledging of our own biases is something that is like so powerful as a trader. Because like I know, I've been, and even going back like a few months ago, I think I was like a little bit more bullish than neutral, like just more bullish and relative to how like other people seem like retail, like the general retail investor. I don't know if you ever do this, but I like going to this site. This is just like the sentiment of retail investors, AAII, which is the American Association of Individual Investors, aka retail investors. Basically just does a survey and asks like, are you bullish? Are you bearish? Whatever. And there's still more 34% bearish compared to 30% bullish. So there's still more bears than bulls, but even going back like a month ago in January, you can see it was like 40%. So people have started to get a little bit less bearish. But the whole time I kind of remained like, I was like, I don't think shit's really as bad as like people are saying it is. I don't think Europe's really going to like freeze in the winter because they don't have enough energy. I don't think we're going to head to this like 07, 08 recession. But really, like, whenever someone would give me a bearish trade or whatever, like, I should have been more aware of that bias. And I might be dismissing it just because I am a little bit more bullish, but maybe I should listen to this and put that bias aside for a second. Yeah, no, I'm with you on that 100%. I think it's one of those things, too, where it's like, I like to speak to somebody else who's going to not necessarily argue, but just converse the opposing opinion of the same trade. Like, you tell me why it's bullish, I'll tell you why it's bearish. And let's see if we can kind of figure out what those levels are to kind of look at. And then the chart will kind of tell you everything you have to know. Sometimes to me, once you have that bias, even though the setup is there, and that's the main thing for me, is like when you see your A+ setup, take it. Don't ask questions. You have your checklist of things you have to see in the market in order for you to take a trade. Just take it. Like SPY yesterday when Powell was speaking. I missed the that upside move on the back end, and I had that on my watch list from the morning. Bounces at the 408. It came in, tweezer bomb on the 50-minute at the 408 for the SPY, and I played the downside. I closed down the account and I was done for the day. Didn't even think twice about jumping back on the upside. This move right here, it's on my right. Yeah, the play down, we caught it at the top. The double bottom at that 408 level, I had in my watch list from the morning. It came into fruition and I didn't take it. Right? Damn. I just didn't look twice at it. I made a mistake. You know what I mean? But it happens. Yeah, and I look at the numbers. Before. You look at what could have, what it should have been, and you're like, yikes. I've had that before where I've been like watching a stock and I'll see like the perfect double top forming and I'll like be watching the double top and be like, you know what, that looks like too obvious. I'm not even gonna buy puts because I'm sure everyone else is. And then like sure enough, the stock will just go straight down. I'll be like, I'll be like, what the hell? Like that was so dumb. I saw that like it was so obvious and I didn't buy those puts. But like everything, I mean, it's never gonna be 100% of the time, but usually the patterns and like if you know how to read a chart, it can help you be more successful than you fail, which is all that matters when it comes to making money. And then the thing too for me is just like second guessing, right? When you don't have that bias, you're not second guessing. You're just playing specifically what you see, or like you're trading in the moment. And then when you have that bias, you second guess like, but what if it? And by the time you're thinking about that, it's just you're not going to that trade confidently. The trade's not for you. Got it. Well, man. So the Master Investor TMI, this has been great. We've only got about 3 minutes left of this show. Are there any stocks, anything we haven't gotten to yet that you want to talk about? Hey man, this is your show. Yeah, this is your show. We can kind of talk about whatever you want to talk about. We can. I was looking at honestly, Bed Bath & Beyond was looking like they were having an absolutely crazy few weeks here. They were going up and down like nuts.
I don't know exactly what's going on here, but the last 2 weeks, that has been a crazy stock to look at. I haven't been trading it, haven't been touching it. I'm streaming, so I'm trying to stay away from anything with a market cap below 500 million. But
I see. That makes sense.
Yeah, they've been going for. We tried to do that for the last few years too. Just talk about it. You can do it. Chart it up, but let's not touch it. Me personally, the ups and downs with the news with bankruptcy and Bed Bath & Beyond and raising money and getting money and then potentially raising more money has this thing going up and down 30-40% like twice a week for the last month. Crazy, absolutely nuts. Have you been keeping an eye on that, Evan? Have you been maybe trading it, getting calls? What's been going on?
No, I haven't traded it. I've covered it. We've talked about it on the different moves. I think it's tough for me because like I get it, and it's nothing new, right? People might think like, oh, this is crazy that the stock's up 300% and it's going out of business. It's really nothing new. I think historically that's happened a lot in the financial markets, right? There'll be a business going under, essentially, a stock's going down, whatever, and it becomes more of a speculative asset, right? Oh, I can buy this, potentially bankrupt company for like $1. Like, sure, let's go do that. And so there have been a lot of other instances, like even in the .com bubble, where a lot of those computer and online stocks were like going under and going out of business, like right before they really went to zero, saw huge spikes up and stuff. So like I love playing these moves when you get like a speculative short squeeze, whatever it is. I would just be wary of anyone that's going to be like, oh, I'm going to dump like my whole life savings into Bed Bath & Beyond right now, because the company themselves is saying like, yeah, we're exploring, bankruptcy, or all these things. So I just view it as more of like a fun, okay, I'm going to buy some calls and hope this goes up 1,000%, not like I'm going to invest my money in this that I need to buy a house.
Yeah, short term, quick plays. Yeah,
exactly.
Only investing in with it, I guess, whatever you can afford to lose. And I guess a few other things too is I've seen that over the last month, AMC and GME have been having an absolute banger past month here. I know a lot of apes are probably gonna want me to talk about that, and there's no way I was gonna leave here without doing that. But I would say, we have seen a little bit of pullback recently in the market with several of these different highly short positions. The market's been a little bit stagnant right now. Levels to watch, I think, that would be interesting for AMC is anything above 650, 752. Anything above that, I think we do see some significant upside, at least short term. And I would want to see the SPY crack up over that 420 level to really unlock a lot of these high short positions, to see some interesting times in the market all over again.
Hell yeah. Well, man, this has been a great discussion. Always, it's been good to get you on. We got to get you on TMI Tuesdays. We're going to have you on Tuesdays.
I'll be back. I got nothing to do.
All right, let's do it. I got the YouTube channel in the chat. You guys go ahead and subscribe if you are not already. Last thing, man, I got to ask, what's the mask? Give me the story behind the mask. You're not wearing a mask now.
Well, the mask with me is very simple, right? The mask for me was one of those things where I had a job at the same time. So all 2021, I was working, right? So a lot of people that were on YouTube were full-time on YouTube. I was working. So I was streaming in the morning from 6:30 to 9. And then I'd work from 9 to 12. Then I stream from 12 to 1. And then I'd work from 1 to 4. And then I stream from after hours 4 to 5. And then I go back and finish up work. Then I make an afternoon video. So all through 2021 was just like, you have to really love what you're doing, right? My thing was, I had a boss, MIT grad, Harvard grad, very intelligent guy who liked to micromanage. So I was like, there's no way this guy's going to catch me online when I'm supposed to be at a meeting, talking to clients, whatever it might be. So put on a mask, you're more anonymous, and then go from there. And that was basically the main thing. During 2021, it was a little bit wild because people didn't really like wearing masks so much. So that was a little. People are very happy.
Controversial.
Yeah.
People were probably in your comments. Why the hell you got a mask on?
Like, grown-ass man wearing a diaper. What is he doing? I was just like, all right, hold on.
All right, hold on. I'm not doing it for why you think I'm doing it.
That's why I was just like, you know what? Okay, enough's enough. Let's just call it what it is. But yeah, that's it.
Hell yeah. All right, man. Well, I'll shoot you an email. We'll get you back on next week. And have a good weekend, man.
All right. Thanks for having me on. Have a great one, guys. And Benzinga, all the editors and editorial staff out there, I love you guys. All right. Just want to make sure I gave a shout out to my people, but that's it. All right. Have a great one.
All right. TMI wants some more love to retail investors. We're giving that note to our head editor right now.
Appreciate it.
No problem. All right, man. Take care. Enjoy the rest of your week. We'll chat soon.
All right. Take care, guys.
All right, y'all. That was TMI. Go give him a follow or subscribe on YouTube if you are not already. But alrighty, 1:01 p.m. Eastern. Time to bring it over to Money Mitch. Let's see who Money Mitch Stock Market Movers got on today. We'll be talking to Michael Green, the portfolio manager and chief strategist at Simplify. So without further ado, let's go ahead and play our special intro and or our outro and send you guys over to Mitch.